It's time to pay up. Forbearance is coming to an end. Over the past year, homeowners who filed for forbearance were allowed to skip mortgage payments. If that was you, you may have options. Welcome to this edition of Real Estate Unlocked. I'm Melissa Spittle, the local real estate expert. Let's talk about some popular options for homeowners whose forbearance is coming to an end. If your mortgage has been in forbearance, you now have extra time before your payments are due again. The deadline to request extensions is now June 30th. This means the ban on foreclosures is also extended through June 30th. So, one of the things you can do is request a forbearance extension. You may or may not be eligible for an extension, but you won't know if you don't ask. It's not automatic, so talk to your loan servicer as soon as possible, because if they don't hear from you, they won't have a choice in the next step of the process. If you're taken out of forbearance and fail to make payments, it will likely have a strong negative impact on your credit. So keep the lines of communication open and ask for an extension. This only covers mortgages backed by Fannie Mae or Freddie Mac though. So if you have a USDA, VA, or FHA loan, this applies to you. If you have a different type of loan, such as a conventional loan, keep watching because you have some options too. Let's talk about how to repay your forbearance. Before your forbearance period ends, you'll need to make arrangements with your servicer to repay what you owe. Generally, there are a few different ways homeowners can make up their missed payments. However, the method of repayment varies depending on your particular loan and the protection that's provided. Not all homeowners will be eligible for all options. What are the options? There are 4. Number 1, a short-term repayment plan may be right for you if you can afford to pay more than your regular mortgage payment for a few months until your missed payments get caught up. Number 2, a deferral or partial claim might be right for you if you can resume your regular payments, but you can't afford to increase your payment amounts. These options will either move your missed payments to the end of your loan or put them into a subordinate lien that will be repayable only when you refinance, sell, or terminate your mortgage. Number 3, a loan modification might be right for you if you can no longer afford to make your regular mortgage payment. Your payment can be reduced to an affordable amount, and your missed payments will be added to the amount you owe. Your monthly payments could also be lower, but it could take longer to pay off your loan. Number 4, a lump sum payment might be right for you if you want to pay back all of your missed payments at once. For most loans, servicers can't require you to pay a lump sum, so if you only hear about a lump sum payment, ask about your other options. What if you can't pay your mortgage, but you want to stay in your home? If you're having short-term cash issues again, talk to your loan servicer so they can help you figure out a plan to stay in your home. Remember, forbearance isn't loan forgiveness. It's just a pause in payments, so you'll need to make up the missed balance eventually. Your repayment plan is a big part of coming out of forbearance and remaining in your home. What if you can't afford to stay in your home? The real estate market has remained strong during the coronavirus pandemic, which is an extra safety net for current homeowners. A lot of homeowners have equity in their homes, so they can sell their current houses and use that equity to help pay off their existing mortgage and possibly fund the down payment on a cheaper house, or at least put some money into savings after the sale. Homeowners who can't afford to stay in their homes can also consider a short sale. That's when you sell your house for less than you owe on it, and the proceeds won't pay off your mortgage entirely. Ultimately, your loan servicer must approve this option. Here's the bottom line. If your forbearance period is ending, that doesn't mean you're about to lose your house, even if you still can't afford your monthly mortgage payments. If you need a forbearance extension, request it. If your mortgage is backed by HUD, FHA, USDA, or the VA, you may request up to 2 additional 3-month extensions for up to a maximum of 18 months of total forbearance. But to qualify, you must have started a forbearance plan on or before June 30th of 2020. Not all homeowners will qualify for the maximum. Check with your servicer about your available options. If you're not in a loan backed by Fannie Mae, Freddie Mac, or the federal government, or you're not sure. You may also be able to extend your forbearance as well. Many services are offering the same mortgage relief options to all homeowners. Take the next step and talk to your mortgage servicer. The most important thing to do is communicate with your mortgage servicer. Being upfront about your situation allows them to work with you to find the best solution. You're much more likely to face an unpleasant situation, possibly even foreclosure, if you choose to do nothing. It's better to call and think through your options. There's no need to be afraid or embarrassed to ask for help if you need it. I'm Melissa Spittle, the local real estate expert, where it's always about keeping it real. Be sure to stay up to date with the latest market and community information. The best place to do so is right here on this channel. It's so easy to do. Just subscribe to this channel and ring the bell. You'll receive notification when next week's video is published.